Hey guys, welcome back to my channel, FLawson, where you can find quick, simple explanations for Forex concepts. So today we are going to introduce Fibonacci, the Fibonacci tool. So what the Fibonacci retracement tool is it's support and resistance. So it determines the support and resistance of a impulse move, whether that move be bullish or bearish. And we use it to find out how far the market will retrace before it continues in the direction of the trend. So, for example, I'm going to take all of this off. I'm going to remove the drawing tool. This would be considered an impulse. Oh, excuse me. This is considered an impulse. An impulse move to the upside, a bullish impulse move. So when the Fibonacci retracement tool is a confluence tool. Let's just make that clear. It's not something that you should use in and of itself. It's definitely something that you should use in addition to other technical analysis techniques such as support and resistance, such as price action, demand zones, even moving averages. So I just wanted to establish that. But again, when looking at an impulse move, and when looking to use the Fibonacci retracement to determine the levels of support and resistance, it is best used on higher time frames. Please, 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 in your trading, please make note that this tool is best used on higher time frames. I cannot stress that enough. Higher time frames have a more substantial story to tell when it comes to assisting you in determining how you should buy or sell in a certain pair. So, okay. Got that out the way. Back to strong impulse move. This is a strong impulse move to the upside here. So what we would do is we would take this Fibonacci retracement tool. We would go in the direction of the impulse move. So that since the impulse move is going up, we would start at the bottom and bring it on up to the top. And here we can see that this price action has now retraced to the 50%. Granted, we are on the 12-hour time frame. Again, price action has retraced to the 50% level. Now, I do want you to take a screenshot of these levels so that you can set them up in your TradingView account. And the most significant are displayed here. The 38, the 50, the 61, the 71, the 78, and the 88. These are my friends right here. And these are the extensions, so that I don't actually have to use the extension. In another video, I'll go over how to use the extension, but I wouldn't have to use the extension if I added these on. And so this is just negative 13, negative 27, 41. So these are my extensions. So there are plenty of trading plans or ideas that people use to determine how they interpret a move using Fibonacci. I know the one that I was taught that I typically stick by is when a pair retraces to the 50 line, to the 50 level, it'll usually take an impulse at least to the negative 13. If the pair were to retrace to the 61 level, it's more than likely going to unless otherwise indicated, it's more than likely after it makes that retracement, it will take an impulsive move, or it will continue on to the 61 level. And if it retraces down to the 71, you can definitely see it retrace back up to the 71. Now, that's not always the case. I mean, this can hit this level, reject, and come right on down. But in theory, those are some of the trading ideas that people stick by, and when you do your back testing, you'll be able to see. So I'm going to do a quick back test because I wanted to make this video really quick. So let's do this impulsive move down. Oh boy, what is going on with my screen? So that's an impulsive move down. We got a 3/8 retracement, right? And it pretty much went and then hit the 50, between the 50 and the 61. And this may be continuing down. This may actually be a downward continuation. Because I know that in our previous, wait, did I do a support and resistance? No. So let's do a fractal support and resistance on this pair. Oh, this is interesting. Okay. All right. This may be a little longer than I expected. All right. So if you've been following me, you know that I like to start when I'm looking at support and resistance and I'm looking to draw trend lines. I start from the weekly, right? I start from the weekly. I go over here to my handy dandy tools. I click on trend line. I am a stickler about my trend line touching 3 points. Why is this not like being cooperative? Okay. And I don't like this color, so I'm going to change it to blue. So this is the weekly. Boom, boom, boom. don't think we can find. I'm not sure I want to draw a channel on this. When was this? When did this dip? Oh, just in March. So I'll just do the descending trend line for now, I think. I think that's all I want to do. No. Let's try this. All right, let's go down. Let's go down to the daily. Let's see how this looks. Ooh, look at that. Go for Cena. Girl, you doing your thing. 1, 2, 3, boom. 1, 2. Yeah, this looks good. It's okay to not get every single line on there. I promise you. This is dating back 2019 August. Like, you really want the most recent drop points and include the wicks when you're drawing trend lines. Well, that's the way I draw trend lines. So honestly, this is a good capture of this descending channel on the weekly and on the daily. So I'll drop down another fractal. So this, okay, last week, oh no, this is a 12 hour, so this isn't capturing last week. Okay. Let's see. And one thing I do like is I like the 20 moving average. And that's what this is. The 20 moving average helps me. It's kind of like my training wheels on TradingView. It guides me. You guys know when I'm on MetaTrader 4, I have like a whole bunch more. But a whole bunch more moving averages, but this is an exponential moving average, 20 exponential moving averages. Okay, let's drop down to the 4 hour. This really looks like a mirror. Like, this is, doesn't this look like it's mirroring this? Okay, so this is the beginning of last week. Last week we had this steep rally up. I wouldn't start from here, and I wouldn't necessarily start from here. I would start from this point when I'm looking at impulse moves and determining retracements with my Fibonacci retracement tool. So at the 4 hour, this is telling me that this is retracing to, this has retraced to the 7-1. Okay. I had said on previous videos that I definitely think that this pair it rallied, it retraced, and it's going to try to rally again and break this weekly trend line. However, I'm not sure how successful it will be. Why? Because right now the dollar is really, really weak. And whenever the dollar is weak, the yen is strong. And so I wouldn't be surprised if we terminated up here somewhere, or maybe up here and then drop back down. I wouldn't be surprised, because the yen is gearing up to really be, the yen is considered the safe haven whenever the dollar is weakening, and the dollar is definitely weakening. So the whole purpose of me doing this is to determine if this was going to continue or not. But okay. Hopefully you got the point of you know, like the Fibonacci retracement tool. You really want to look for impulse moves. Like I said, I think we looked at this impulse move, right? That's where we were. We were at this impulse move. That it, okay, so this is like, had a 50% retracement. Then it traded sideways. It then retraced up to the 78. And if we look at it from that angle, this could continue down and not even bother retesting. I think that's what I was getting at when I did the retracement move of this, because yeah, it may be, this pair may be now looking to retest this zone, and we might need to, we may be selling down, but we shall see. Take it, we take these things one day at a time. So I hope this was helpful. I really do. If it was helpful, please comment, like, share, subscribe. If you need more information or you want more examples, I can always make another video. But I just wanted, I know in my previous videos I've been talking a lot about Fibonacci retracement, but I actually have not done a tutorial on what it is and how to use it. So hopefully that was helpful. Thank you so much for watching, and I'll see you guys on the next video. Bye bye.